Welcome to Lesson 8 and the final lesson of our course in financial accounting. Congratulations. You have persisted right up until the end, and now we're going to complete our lesson, take the final exam, and compute our grades and move on to the next stage in your college career as business majors. Chapter 12 is the final chapter, only a single chapter for lesson 8, and it deals with the cash flow statement. Normally we cover this statement at the very end, and it's always produced also at the very end, but it is in many ways the most important statement because the company has to regulate its cash flows so that it has adequate cash to pay bills, to acquire materials, to obtain working capital, and to carry on its operation. If at any time the company runs out of cash, that's a very serious matter. It necessitates either a loan or an infusion of capital in some fashion, and that's very difficult to obtain in short order. Also, banks do not like to loan money to companies that are showing financial distress. It means they've planned poorly. So the cash flow statement is simply a statement that guarantees that we're matching our short-term, year-to-year cash flows with our income, with the actual receipt of the cash. It's entirely possible, remember, for a company to be making sales on account and not collecting them properly and run into cash flow problems for that, as well as a myriad of other issues. Let's take a quick look at the chapter outline. We're going to look at preparing the operating activities section of the statement of cash flows using two different methods. One is the indirect method, the other is the direct method. I will quote for you the direct method under generally accepted accounting principles explicitly or directly identifies the major sources and uses of cash. To illustrate, assume that during the year, New South Company earns revenue on account of $500 and collects $400 cash from customers. Further, assume that the company incurs $390 of expense in accounts and pays $350 cash to settle accounts payable. We look at the operating statement resulting from that net cash flow from operating activities, and you can see that at the bottom of page 620. In contrast, the indirect method starts with the net income as reported on the income statement, followed by the adjustments necessary to convert accrual-based income into cash-based income. So we recognize then the actual timing of the cash flows rather than employing the matching principle of revenue with expense. Okay, check that very carefully. So item 12.1 on page 621 gives you a clear and simple look at that without a whole lot of extra bells and whistles. And when we do the work assignments at the end, you'll see that problem 12.2 and problem 12.4 follow this format very nicely. Our second two learning objectives for lesson 8 are preparing an investing activities section of the statement of cash flows, number 2. And number 3, preparing the financing activities of the statement of cash flows. So note that the statement of cash flows has 3 sections, very much like an income statement has 3 sections. Activities, this is the primary activity of the firm, what the company does to make money, what they make or sell or produce or generate or what they're known for, how they make their dough. Number 2 is the investing activities, whereby the company takes its excess cash flow and invests it temporarily, generally, sometimes long-term, for a return. And finally, the financing activities, paying for expansions, acquisitions, changes in the operation, in other words, long-term investment in capital, buildings, and equipment. So these are the 3 portions that the chapter covers: investing activities, financing activities, and of course the operating activities most of all. There are also, in addition, non-cash investing and financing activities, and the most prominent of these is depreciation. And so we Do not count depreciation as cash flow, even though it does represent a reduction in taxable income in the present time. Exhibit 12.3 formats a statement of cash flows for you, which will come in handy again when you're working on the additional problems at the end of the chapter. We will try to do all of those problems in the chapter at one time, and that will ease your homework burden, and you can prepare for the final exam. Not a lot more to say on this. A lot of it is simply additional looking forward. However, I do want to address your attention to page 642 and the operating income versus cash flows from various airlines, not just airlines, but other major companies, including McDonald's. Take a look at that. It'll give you a good idea of what the cash flow statement provides in the way of useful information for the potential investor. Looking forward to seeing you in class. Goodbye.